Hi, today I would like to share how to spot the right deal to invest and how to make big money with small capital. Yes, don't be surprised. You can make big money with small capital. In my thesis, basically, I'm writing about the factors influencing the investor's confidence in investment, regardless real estate or whatever. Most of the people want to be an investors, yet most of the people are scared to invest. There are a lot of reasons. Number two, the two reason is mainly is because the thing is too complicated. Second is the fear factors. So these are the two things that drive away a lot of investors. Again, when it comes to investment, right, as an investor's perspective, we always share that portfolio management is very important. First, you diversify your risk, right? And also second, to set different financial capacity, your financial goal, and your risk appetite. Each and every investors have a different capacity, goal, and risk appetite. Bear in mind that. And of course, there are a lot of strategy, approach, and all that. So to me, basically, there are two objectives. Either we want to have a positive cash flow or capital growth. Depends on your age, depends on your financial and all this. Everyone have a different objective. And then, of course, the asset allocation also very important. When we have funds to invest, basically we need to know, are we going for the conservative asset back that you're expecting a ROI maybe 8 to 12% per year, right? And then non-asset back. So basically you have a certain level of risk exposure, okay, that may have a very decent return in the range of maybe 24 to 36% per year, right? Or there's a capital growth of 2 to 5x in 3 to 5 years. So it very much depends on your financial objective. And then, of course, before we invest, these are the very simple questions that we always ask. First, who are the person? Either the company registration is that person, the so-called the founder and all these, is it Googleable or not? You will see a positive review on this person or is a negative review. So you do your own judgment. And then the vision and mission of the founder. Sometimes when we discuss with the founder, right, you see that their vision and their mission is so noble and so long-term. They're not here for an overnight company. They're not just here to raise funds and then they hope they can succeed, right? They have a far-sighted vision. And then, of course, the character of the founder and also the key management. Business always about people. So the moment that you feel very comfortable with the founder and the key management, yes, maybe you find the right team. But the moment you share with them, you talk to them, you discuss with them, you don't feel comfortable, then maybe you should do your judgment, right? It's not just about how much the business proposal can help you to make money, but the driver, the founder, the key management also play a very important role in any business, all right? And then, of course, how many years this business have been there? Do they have an audit report? Right? Sometimes you will be surprised to see that a lot of companies out there asking for money, asking for funding, but they don't even have a proper audit report. Right? So you have to do homework as well. And then when you do some background check, right, it isn't important is that person famous or not, but the most important is reputable or any reputable institution involved in that business, right? It's always about the track record. And then, of course, the second W is what? What kind of business model? Is it a sunset business or sunrise business? Always go into sunrise business because sunset, right, is very challenging. You never know when the big hit, then you have to close your shop. All right, always go for a sunrise industry. And then, of course, the 3S that I always keep on repeating is the first, sustainable. For any business, when you look at a short term, if it cannot sustain, you have to keep on burn and burn and burn. The moment your pocket no longer have that kind of liquidity, then you face a lot of challenges. And then, of course, the second S is scalability. A good business is something that you can scale to a different market and also to reach a different users, right? The business has to be scalable. And of course, the third is socially responsible. Whatever we invest in the business, what kind of positive value that add to the society, to people that really need it, right? And then, of course, the risk and reward. For certain people, the risk exposure is very low, right? So they're looking for something that is very low reward because their objective is they want to keep their capital. But for certain people, maybe a different age group, they're looking for a higher reward. They don't mind to take a certain higher degree of risk. So you always have to justify. If today we put our money into something that is very high risk and only getting 1-2% per year, maybe you should change your strategy. And then, of course, whatever return, you always ask tax. All right, there are three things that will never change in our life. Right, that is number one is tax. So always invest in the place that you think that is tax friendly. All right, or it will help a certain level of your business tax income. And the third W is, where is the business? Sometimes, a lot of times, right, all these online businesses, the challenge is online. So you never have the opportunity to visit their office. Maybe it's too far away. But you also can do Google that this office, is it real, right? Where is it located? Cannot have an office that is nowhere in the jungle. So you have to do a little bit of homework there. And then, of course, when the exit is very important. For investors, right, basically, we always plan ourselves. We put in a capital, maybe after 6 months or 1 year, what kind of exit that we're going to do, what kind of investment that we're going to get back our money. So you have to plan short-term, mid-term, and long-term. And all the exit plan has to be justifiable, right? For example, people invest into properties and they hope they can sell the property tomorrow and liquidate it. It's very challenging. So you have to plan all this properly. And then, of course, the most important question is how this capital are injected. All right, is it through a licensed entity? Is it regulated? All right, not just pass a cash to someone else. You are taking a very high risk. So before invest, these are the simple questions that I always ask before we invest. All right, and then of course, these are the simple questions that we always, if you have the opportunity to meet up with the founders or meet up with the key management, you have to ask all these questions. All right, probably also get the documents that I'm going to share later, the company history, their profile. Right, the past project details, what kind of project they have done, what is the track record, all right, is it good enough? And then, of course, the third party like lawyers, bank, accountants, all this information, you have to do some background check on them, all right? And of course, the capital, where the money being spent, right? Like just now we have shared. If you look at the paycheck to the teams, it's very high, and only a small portion of the money go into the business as a working capital. You have to make a what they call it, concern on that. And then, of course, the projection P&L. For any business, right, if they cannot plan properly, of course, we don't have a crystal ball to know that what kind of revenue, and all this is just as a reference. But we must have a gesture of it, right? Let's say 1 year, the business plan shows that you will grow 20%, 30%, CAGR, whatever. At least you know that it's something that is achievable. And of course, when we invest, right, collateral. Why I love to invest into asset-backed properties, although the return may not be that tremendous in all those kind of credit investment, but you have an asset, right? It can be a land, properties, a personal guarantee, or corporate guarantee, something that is you think is comfortable, right? And then of course the exit strategy, right? All this investment, if there's no defined exit strategy, you are in the dark. So you have to do some interview, research, and all that, how this money are going to receive back, and then recovery plan. Every investment comes with a certain degree of risk. So you must know what kind of risk exposure, what is the mitigation plan, what is the recovery plan, worst scenario. Are you totally prepared, the money being gone, right? That is $1 million questions, right? And then of course, the financing costing budget, you have to look in their cash flow and all this, and timeline for financing. Because the cheapest cost is always from institution, right? From all these banks and all that, the cost is very low, okay? So this is a very simple investment philosophy that I always keep on repeating, tell myself, good time, bad time, there's still many people making money, right? Why? They always have a strategy. They always do their homework, all right? And then of course, the second is, before invest, do all whatever due diligence that you have to do, you need to do, right? But the moment you decided to invest, you have to prepare to lose all. Why? Then only we can able to help ourselves to avoid go into the greedy territory, right? The moment we become greedy, sometimes it will cover our judgment. So I hope that you take these two investment philosophy whenever you invest, right? Always think about this. So when we invest, these are the document checklists that we always ask from the companies. What is your 12 months latest bank statements? Is it on the positive side or a lot of interesting in and out? And then the company registration documents, is the person so-called the founders or the key management, are they in the SSM documents or maybe some company registration? The latest management account. Of course, these documents are very much depends on the size of your investment. If you invest a small sum, maybe you have a lesser bargain power. But if you're investing in a big sum, always ask for all these documents because that is almost the real-time financial position of the company, right? And then the auditor report and all this. Bear in mind that all these auditor report for the past 2-3 years, it cannot be the only judgment for investment. Why? The past does not guarantee the future, right? It just as a reference. And then of course, the bank facilities, are they a pay good master to the bank loan and all that, right? The latest debtor, creditors. So all these are very simple documents that you should ask before you make the call to invest or not, right? And then of course, when it comes to investment, we always do a SWOT analysis. What is the strength, right? These are sample of the company that we invest, right? So basically we do a thorough study. What is the strength? What is the weaknesses? Every business have a weaknesses. Is it a weaknesses that can overcome with certain like technology, right? Or certain resources like human capital? And then the third is the opportunity. The bigger the opportunity, the better the investment will be, right? And then of course, it comes with a threat. Maybe the nearest competitor, right? They're just that far to overcome your potential investment. So you have to do this simple SWOT analysis, right? So you know the position of this company. Is it worthwhile to invest, right? And then of course, when we talk about the 2O, other people's time, right? You're leveraging on other people's time. The second is other people's money. So as investors, right, we always look for opportunity where we can leverage, right? Same to a business owner. So let's say the banks, right? The second, maybe private lenders, investors, the seller carryback or operation cash flow. These are the 5 types. There are more, but these are the 5 majors OPM. So the investors part, right, basically is a very interesting part. Why? With a business proposal, especially those startup, they may not have a track record, but with a business plan and all the team management that they gather in, then you have a gesture of this business, is it worthwhile to invest, all right? So when we understand this, we also need to understand when we invest in any business, it's just like engineer the entire ecosystems, the lifespan of a business. So you have to do a planning at which stage that you should look for, what kind of investors, what kind of fund size. Then maybe the second stage on the early growth. The third stage, the expansion, what kind of fund size. Maybe the potential investors will be a institution, someone have a bigger fund size, right? And the fourth one is always go for public. It doesn't mean that all the business only, you make a big return when you go for public. There are also other options, maybe M&A and all that. So when you look at the timeline and also the growth of the company, you'll be surprised to learn that almost 90% of the startup fail miserably in a 1-2 years, right? Because that is inceptions, new ideas. It may or may not prove right when they start to implement. Maybe there's a different resources or they lack of certain resources, they're able to take off, right? And then of course, when here, a lot of company that pass through this valley of death, they go to a second level of financing, funding. It can be from the business angels, right? Or P2P, crowdfunding, VC, and PE. This will be a gap, all right, from a business to jump. So if you position your company, all right, or we want to invest in any company, you have to know that company at which stage, right? If you come to a late stage, like the IPO and all that, the return may not be that attractive compared to any business that you invest early stage. But remember the valley of death, all right? The success rate is very, you have to make a call, all right? There's no right or wrong. Sometimes we also see that that business is promising, but who knows, after a few months or even 1-2 years, it go haywire because it always come back to 2 important things: the direction of the company because of the people. So you have to really sit down and discuss with the key management, what are the directions, what is the objective, what is the mission and vision. So it's very important for us to understand all this before we invest, right? And then of course, there are a lot of registered, recognized market operators, the license. This is example in Malaysia. There are ECF, there are P2P, there are also all these PCF. So basically, there's a lot of channel for business to go out and reach for financing, funding the legal way, right? And then, of course, one of the approach is maybe there's a crowd plus, right? There's a ECF that you can explore because it comes with a certain benefits. The entry may be low, and the target market is so huge because everyone, right, with a decent capital can start to invest. Like there's one question that asks, if I have only 10,000 ringgit, can I invest? Yes, definitely you can, but the channel may be different. If you go to, for example, here, right, you have a fund size of maybe 100,000. You can invest through crowdfunding, P2B, but if you want to invest through the VC channel, you may have to have like millions and millions of dollars. If you want to invest through a PE channel, you may have to have like 50 or 100 millions because at every stage of this financing come with a certain capital outlay, right? Requirements. Of course, the return also slightly different. So here, this is one example that our working channel, plus the first ECF in Southeast Asia. So basically, when you explore the benefits of going through an ECF, is very interesting, right? Because they have a huge database that you can explore, you can throw your business, you can pitch your business idea to them. Of course, it's always a channel, a platform, right? It always back to the founders and the key management, how you're able to convince the audience that my goal, my business proposal is something worth your time to explore. All right. And then of course, when it comes to investment, right? This is a story that I've been sharing for I don't know, maybe hundreds of times. Sometimes in life, you just need to make one right decision. For example, Nike, founded in 1964, with a capital of 1,200 in the bank. I'm sure most of the audience, you have this sum. But imagine if at a time you put in, let's say 1,200, I have $100, I chip in, I own 10% of this company, say, right? And 2018, and now the valuation is about 120 billion US dollar. Can you imagine the growth? That is about like 1,500x per year, right? So when it comes to PE, basically they're holding a much longer period, maybe 5 to 10 years, right? And the return is very, very good. But again, with this kind of channel, you may need to have a huge capital before you're able to invest, all right? So some people say, okay, at the PE stage or the early stage, it's just about business plan, a very early stage of the entire business model, you know, there's no result to show you, but they have a very good team, a very good business plan, right? So you make the kind of return is worth it. Some people, they say, okay, I want to invest when I see things are clearer. Okay, so basically it's very expensive when you see things, right? There's a premium to pay. So in 1980, when Nike going for listing at 17 cents, so at the time, some of the people, they say, some of the investors, they say, okay, this is time that I know this company going for public, right? More or less, it's quite assured. Then they invest because the risk is very low. So you still make a very good, decent, about 12 times per year. So always remember at current present moment, right? Every time it lies a great opportunity behind this crisis, all right? Why? Because when you look at the current situation, back in 1920, you know, every 100 years and all this kind of a disease, pandemic, economy, crisis, it lies a great opportunity. It may be an opportunity of a lifetime for anyone that see the opportunity behind any dangers, right? So what will be the potential business to invest as investors? So basically, we see from here, after this pandemic, a lot of conventional business, especially those business that you cannot sustain with a very low teen margin, right? Or you cannot scale, right? Because of technology, whatever limitation. So you will face a huge challenge or you'll be faced up. The potential winners are these companies that have been listed here, agriculture. More and more people go to the basic, fundamental, essential items. The e-commerce, this is where we see there's a big opportunity to grow for all the e-commerce businesses, especially those doing grocery, right? Because that's the basic needs for everyone. And then the ICT, especially when you look at, imagine if the current pandemic happened 30 years ago, when we are still using Nokia 3310, you can't even surf online or do WhatsApp, whatever. Can you imagine the kind of situation that we're going to face if at a time that ICT is far behind? So you invest into ICTs, right? And then of course the personal healthcare and all that. This is a moment of time where people start to go for sanitizer, mask, and all that, right? So every danger, it create a opportunity, all right? And of course, back to the second things that I always emphasize is do what you love what you do every single day, every single second. You have to have that kind of passion to share your dreams, right? And also have a financial objective when you want to achieve your financial freedom. At what point of time in your life that you're able to buy things, you don't look at a price point, but you look at your personal preference, all right? You buy something that you can afford, especially you're able to bring your family to travel, right? Forget about all this stress and all that, right? You have to be positive, right? Because here we translate how you talk and how you think is very important. So if you're still wondering, right, I'm an investor, maybe I just want to become a beginners. I want to start to invest. I only have this kind of amount of money. Don't worry, because out there's a lot of the so-called investors club and all that. So we are, for MCM, basically we are global project management consultants company. We're doing a lot of project management, and because of our passion in this investment, so it's part of a CSR that we launched this global investment community back in 2016. This is the 4th year anniversary. So basically it's a community where all the members have a different walk of life. Sometimes some of them are professional, accountant, lawyers, and all that. And they come into this community to share their experience. So I hope that you can take this opportunity to become one of our members. Remember, it doesn't matter you start your investment journey or not, but you start the journey to learn. Knowledge is power, right? No one can take away your knowledge, all right? And then, of course, after the whole complete of these 4 series, we are going to launch our second series, that is Mandarin. So I hope I will not surprise you when I share in Mandarin, right? So if you want to become one of the global young entrepreneurs, you may email to us. Let us to find a way how we can help you to become a young entrepreneurs. It's never late to become entrepreneurs if you're mentally and wholeheartedly ready, right? Okay, thank you.